All right, good morning, everybody. Welcome back to the weekly breakdown. Let's keep it short and sweet. So, I'm getting this up on Monday morning, and I think that I'll continue to do them on Monday morning. I don't really know anyone who's trading Asian market open on a Sunday, but if you are, it's generally not the most ideal market conditions on gold, and it just gives us a little bit more information to work with coming in to start the week. So we do have FOMC this week. It's a stacked week in terms of fundamentals since the CPI, federal funds rates, interest rate decision, and FOMC statement. This is a big event. Markets are moving heavily based on the central bank's monetary policy. We saw last week that the ECB, the Euro Central Bank, did a surprise rate hike. So we can see here on Thursday, the ECB was forecast to keep rates the same, and we saw them give a 25 basis point increase. Now, going back to last week as well, we can see here that for US CPI year on year, we actually had increased numbers. So they were forecasting an increase from the previous being 3.2. They had forecasted 3.6, and we came out even higher than the forecast. Now, one of the Fed's main points at most of these FOMC meetings is we are data dependent. So they're not really giving clear answers whether they will raise rates or cut rates or what they will do next, but they are just working with the data that is given to them month by month. So if they are saying they are data dependent and we've seen a jump in inflation, I believe that there is a higher probability that we get the same story as the ECB, where we get a surprise rate hike. Considering that they forecast to keep rates the same here, I would not be surprised if we do get a 5.75, so a 25 basis point increase. But at the end of the day, we just have to see what they end up doing. And one thing that we can note coming into FOMC, what we generally see is a lot of ranging. So what do we have before FOMC? Let's see here. Monday, really not too much going on there for the dollar. Tuesday, you got some building permits. Nothing crazy, right? So don't expect too much volume and volatility leading up into FOMC. Just based on the fact that markets will be waiting to see what happens here. What else do we have? Fully Fed, unemployment claims. Alright, so overall focus will be on the FOMC. Like I say, main takeaway for now is really just that we need to be aware market conditions leading into FOMC may not be the greatest. And if we do see that surprise rate hike, then what we could expect to see on the dollar is over the last few weeks, we've been extremely bullish here. And I would anticipate to see us continue to move bullish, possibly even getting breaks above this extremely significant 105.5. Now this is a very strong level, and if we do get breaks above there, I don't think that there's any looking back for the dollar anytime soon. And we could begin to start working our way back up to these highs from last year, very gradually. Not as much volume to the upside as last year, but definitely something that we could then start to anticipate. Other than that, I do believe that we need a some sort of pullback here on the dollar. You know, we've been moving really nice and bullish. You can see this bullish structure right here. If you are getting breaks of this bullish structure, then, you know, we may start to see a deeper pullback even to like 103. But overall, let's just see what price is doing at this 105.5 level, as we're still hovering around that level. So now just, of course, tying in the dollar and gold, since gold is obviously correlated to the dollar, although just keep in mind that both gold and dollar can be moving bullish at the same time. So it's not always a one-to-one correlation, but it's very powerful to use this as a tool when doing an analysis on gold. So our monthly candle, so far we have come down most of this wick, as we had discussed last week. Last week's candle, we did begin to move bearish, and we saw a retracement in the last day of the week on Friday. So, you know, we ended up closing with quite a small body there, a bullish body, and this is more of a rejection down from 1900. I wouldn't say that my bias has completely shifted from bearish, but we definitely need to take this into account here, how the weekly candle has closed and where we are reacting to. So we had this support on the weekly around 1920, and we can see obviously closing back bullish above that level, that zone. Then we would be looking to move back up to our next level here on the weekly potentially. So now we can start to scale in. Looking at the daily, we had a very strong bullish candle closure on Friday. We came up into 1930 being a significant level here. You can see this range to the left. We are pretty much in between the same price points, 1930 and 1900 or 1903. All right. So just keep in mind this range here to the left. You know, we had this same bullish movement up into 1930s. This particular candle even wicked up a little bit higher all the way to 1935. Ended up coming all the way back down to 1905, 1903. So if we are not breaking above that 1930, it easily then start to look for sells from 1930, maybe below some of the structure that we formed right here at 1922.5. So if we're taking sells of 1930, we can anticipate price to at least come down to 1925, 1922.5, and be securing some profit, leaving some runners, looking to come back down to 1915, the lows of this range that we were in last week. Now, like I say, you had this range right here from last week. So what are the probabilities that we end up seeing that same range forming leading up into FOMC? So if we do come down into 1915, you could potentially even start to look for the buyers moving back up to the top of the range. This then, that move down to 1915 may even end up being your bottom wick for the week, and we may start to move back bullish at that point. So for now, I do think that just looking at the structure, it's going to be safest to be taking buys above 1930. Above 1930, you've got a couple levels to be aware of, such as 1932, 1933. If we just look to the left here, you'll notice that 1930 was definitely your key level, but you had a lot of rejections from 1933 as well, and as well as 1935. So 1935 you can see was also just some previous structure here from the week before last. So just some levels to keep in mind as we do break above 1930, if we do break above 1930. Although looking at this structure, if we could get a break and retest here, so just starting to form some bullish structure here above 1930, we could potentially start to look to move up to 1950. Now keep in mind, I'm not a swing trader, so this is not necessarily a swing trade idea. You know, this could potentially be something you look at to hold runners to 1950 or not even 1945. But overall, what this would tell me if we did start to see this is that I know on the lower time frames that I can start to scale in and look for those buying opportunities moving up. So 1930, very important level here this week, and like I say, we could be looking for the rejections here for now as we maintain below this level and start to look for the sells back down. But if we are getting those breaks above, I would start to look at those buys in line with the weekly analysis, with the weekly candle. And then, like I say, your other buying opportunities is if we do come down to, let's say, 1922.5, and we fail to break this structure, form a nice support, get nice confirmations, then you could also look at bars like this. But really what I would like to see is that move back down all the way to 1915, taking advantage of these sells, playing this range. And then if we could get some nice confirmations of 1915, then anticipating that to be the bottom wick on the weekly, like I say, to start moving back up to 1930. Now with FOMC, anything can happen. So if we do get breaks below 1915, then we are easily looking for a wick fill on the weekly, even though the weekly candle closed bullish. Overall, we are still maintaining higher time frame bearish structure, or yes, higher time frame. So let's just zoom out here again to the daily. You can see this trend line that I've drawn in. So trend lines are subjective, take it with a pinch of salt, but we can see that we're moving back up into this trend line. We did create a new low here on Friday, middle of August, and then we formed a new lower high here at the end of August, right? So for now we're still printing this bearish structure. Of course, we formed a new higher low, but until you're forming higher highs, this structure is not yet bullish. So to really be more bullish on the higher time frames and say that this bearish trend has started to shift more bullish, we would need to see breaks above 1950. So like I say, based on the weekly, we've got this bullish candle close last week, of course, but if we have the right confirmations in place, what we could potentially see is this wick from last week getting filled. And like I say, in order to see that idea of last week's wick being filled to the downside, we would need breaks below 1915. Nice retest there. And then looking to target 1900, 1903, 1903, 1900. Perfect. And then, like I mentioned there, as we zoomed out, breaks above 1950 are really going to give you nice confirmations for a higher time frame shift in structure. And of course, course, if we do get breaks above 1950 this week, then looking to the left, we've got nice clean traffic all the way to 1970. A little bit further to the left, you've got a lot of issues around 1965. So just be wary of that 1965, but we look good here for breaks above 1950 to start moving all the way back up to 1970. Possibly even 1980, but obviously just wanting to target this most recent structure here. So that's that, guys. Anything can happen this week with FOMC around the corner. Expecting lower volume and volatility to start the week. So take it easy and just keep in mind, we may just be playing this range for the next couple days. And then once we get breaks above 1930 or 1915, we'll get clearer confirmations. Perfect. Thank you guys so much for checking in. I hope that this is insightful and that we can get to take advantage of some of these ideas this week. And I will see you guys for New York session today. Cheers, everybody. Take it easy. Safe trading.